What's up, y'all? I'm gonna make it quick. So, I've been in crypto now for about 5 years. I entered the market right at the tail end of the last bull run. And I'm not a millionaire yet. Not yet. I'm definitely not a financial advisor. So what you're about to hear is my insight based on my own experience, my research, and my own conviction. Now, I could be wrong. So this is just my opinion, okay? But I really feel like it's necessary to make this video. Now, I had to make some adjustments because originally Bitcoin was at 95,000, but it has dropped to 90,000. Let's check out the chart. It's sitting roughly at around 90,000 at the time of this recording. And what it has done is has broken a multi-year trend that started way back when it was at around $15,000. All the headlines are screaming crypto winter. It's the end. The technical damage is real. But honestly, guys, I think this chart is a distraction. It's not a fundamental failure. It's a structural adjustment. And at this moment right now, it's the ultimate test of conviction and liquidity. So let me break it down for you, right? Now, if we're looking at the chart, and I'm not a chart reader, this is just me looking at the chart based on what I learned, based on my experience, right? After topping above 126,000 back in October, as you can see right here, we've seen about almost a 30% sell-off, drawdown. Okay, the market is forcing sellers out through coordinated tactical selling that's engineered to amplify fear. The long-term holders, the whales, have sold off more than 815,000 Bitcoin in the last 30 days. And here's a key detail, guys. They're selling into weakness. Not like other cycles where they sell into strength or they have sold into strength. The difference is this time, there's simply not enough demand to absorb the supply without dragging the price lower. That is not a structural collapse, folks. That's a liquidity crisis. I've done a video on liquidity, but what this does is it brings me to where the institutions come in, okay? Let's talk about the institutional flows. That's where things really come into focus. So here's what it is, in my opinion, guys. We're relying so much on the government's message, the Fed's message, and the institutional message. Spot Bitcoin's ETFs have recorded 2.6 billion in net outflows across 5 straight weeks. That's the longest streak since early 2024. So this is what people need to understand. And I think most of you probably know it, but institutions are not emotional. They're opportunistic, simply, right? When macro uncertainty rises, they pull liquidity. They suppress the price, and they only come back in when the risk to reward is in their favor. And what's the trigger, guys? What's the trigger? The Fed, the Federal Reserve, the constant debate of whether to delay rate cuts. Now, this specific hesitation is a direct delay of liquidity entering the system, my opinion. So what do you think happens? Institutions force the price down to structural floors, as we see. We just broke the 94,000 cost basis for midterm holders, and we're now heading towards 87,000, possibly 74,000, right? That's not chaos. This is the accumulation strategy disguised as fear. And here's why the chart could fool you, in my opinion. Have you paid attention to the news lately? While the price is breaking down, the fundamental infrastructure of crypto is accelerating faster than ever. Real world asset tokenization is not a theory. I'm talking about Ondo, Plume, you name it. BlackRock's Builder Fund is tokenizing US treasuries on Ethereum and already has over 2.8 billion locked. That's not a fad, guys. That's the new financial plumbing system being built in real time. And I can't even say it's behind the scenes. It's literally in our faces.
I would say the biggest question from central banks is, what is the role of tokenization and digitization? How quickly should they think about digitizing their own currency? What does that mean for the role of the dollar? If every currency digitizes and we have what does that mean for bank payments? What does that mean for the payment companies like MasterCard and Visa? All these are being questioned right now. I think we spend so much time talking about AI. We're not spending enough time talking about how quickly we're going to tokenize every financial asset and the opportunity we're going to have a digital wallet and moving, ETFs and other things through a digital wallet. And I think that's going to happen worldwide very rapidly. And I think most countries are ill-prepared for that and underappreciate how technology is changing that, not unlike how technology is changing AI and other things. It will be changing the technology around the plumbing of finance.
And let me tell you, I always relate to BlackRock because they're the largest asset manager in the world. We're talking about almost $13 trillion. Now, as of this date, I've looked up some information and it says less than 1% of their portfolio is in crypto. And they've actually advised that 1 to 2% is what they've advised. But according to them, less than 1% is in their portfolio in crypto. So now let's do the math. And what I'm also going to do is also include some of the other institutions. Okay. Now, we've seen massive ETF outflows with institutional investors selling shares to lock in profits or reduce risk during the dip. But here's the strategic endgame, guys. Catching the liquidity they help create. Imagine BlackRock's $12.5 trillion portfolio as the entire ocean. The $100 billion they strategically allocate to Bitcoin or crypto is a tiny, powerful fin. Now, this is just a scenario, okay? Not to say that they're actually using $100 billion all at once, but catch this, okay? When the price hits the low of 90,000, that fin, the 100 billion, sweeps in to buy and absorbs all the fear and establishes a new floor, as you can see when you look at the chart. So by perfectly positioning 100 billion at around $90,000 and riding the recovery back to 126,000, that strategic move generates a 40% return. That means a profit of 40 billion, guys. $40 billion. That's not just a big number. That's an astronomical one. That single trade, and it's not a single trade because I'm sure they've done it over a couple of weeks, that trade profit is so large it could fund entire governments or major global initiatives. Let's think about it like this. It's roughly the cost of several major US infrastructure projects. And for one of the world's biggest companies, Amazon, it's comparable to their entire annual global marketing and advertising budget. That's crazy, guys. But that shows the power of institutional liquidity. They're using a fractional allocation from their massive portfolio to generate a profit that has the spending power of a small nation, all through a single or a couple of strategic trades in the crypto market. Now, the other thing that we have is regulatory clarity emerging through legislation like the Genius Act on stablecoins. After I talk about all of that, guys, what's the irony? I said it before, I say it again. Those same firms selling tactically through ETF outflows are the same firms building strategically through tokenization. They're not exiting crypto, they're reshaping it. So that is why I felt the need to make this video. And I could be wrong, but that's just my opinion. We're at a structural juncture where price action and fundamentals are completely disconnected. And so if you're in the market, pay attention. Well, if you're not in the market, pay attention to the structural floors. If you're in the market, this is the moment exactly where you evaluate your convictions, because the institutions are using macro uncertainty to drain liquidity and reset price levels. Now, in my opinion, the simplest recovery signal to watch is a multi-day return to sustain positive net inflows into the spot Bitcoin ETFs. That is when institutions show their accumulation is complete. And you can track these metrics daily on specialized websites that publish fund flow data, such as ETF Database or Buy Bitcoin Worldwide. Until then, you must decide, patience or panic. Hey, listen, if this helped you, or if you thought it was interesting, or if you have an opinion and you're not subscribed to the channel, go ahead and subscribe to the channel. Make sure you share this video with someone who needs to hear this. It's your boy. Thank you for watching. I'll catch y'all on the next one.